Mike, what worries you about the global economy? If you look at the global economy, Sheila's absolutely right. Everything's on track. It seems okay. A lot of it is fueled, I guess, by a tax cut in the U.S.
Yeah, I think that's the challenge. The challenge is how much of the acceleration in U.S. growth is sustainable. So we've been through this very strong period of growth, and also a point in time when the Fed has been raising rates. I think what it is very hard to know is as you look forward a year or two, whether you can get the self-sustaining, second round effects from this bout of stronger growth, and how quickly the Fed rate hikes bite, and where they bite, of course. They may not bite in the US, they could bite outside of the US as risk-free rates go up in the US, and money that went abroad because risk-free rates were so low starts to come back again. So I think as you look forward a year or two, that's where the main challenge is. Our sense, for what it's worth, is that we don't see a lot of second round positive effects from the tax cut. So as we look through next year, we think you'll see a slowdown in the US, but that really is the crux of things at the moment, we think.
Do you expect, first of all, in terms of US growth, Sheila, are you pretty comfortable that it will continue on the trend that we've seen so far? And what do clients ask of you? What's their number one concern?
Well, when you look at the U.S., clearly we've been on a growth trajectory that's pretty heightened. I think we see it returning to more normalized levels, but still strong. What clients have really been looking at lately is the divergence that's happened between EM and DM. You've really had a first half where EM struck out in terms of underperformance. You've seen valuations get more attractive again. Certainly when you look at what's happened in EM, you see that a lot of the action has been about PE multiples, while earnings and dividends have been very strong. So is it the moment to shift gears? Is it the moment to get back into EM if investors were underweight or had moved out? I think the second thing that they're definitely looking at is, as they look at the broader swath of issues with sanctions and so on, should they look at domestically oriented companies, U.S. small caps, rather than the broad swath of U.S. companies or S&P 500, similar to the kind of stories they might look for in EM?